Hello, everyone. Good evening. Thank you all here for joining us and for your patience here with our technical difficulties. I'm here on vacation in another part of another country, so here getting things organized, not at my usual trade station setup. So with that being said, let's get right into it. We'll get to introductions and get right down to it. So my name is Dylan Richards. I will be hosting this meeting along with my co-host, Tommy. I am a financial analyst and I do trade professionally. With that being said, we're looking forward to getting into our usual intermarket Sunday analysis, where we'll do a top-down analysis on all the instruments. So we'll have clarity going into the week of what to expect and why we should expect those things. So with that being said, let me pass it on over here to my associate, and we'll get right down to it.
Hello, good evening, everyone. My name is Thomason, and I'm a trader and I trade professionally. Great to have you guys on the call with us once again tonight, and looking forward to a very interactive and crazy, sorry for the word, beautiful session. So, like as usual, we start with the intermarket analysis with and the 10-year yield and return over indexes and the forex market. Then we give you guys the floor to interact and talk. Once again, we're welcome to the live session and the weekly look ahead. Have a lovely time. Hello, Dylan, are you there?
Yes, sir. Let me share my screen to you, Tommy.
Okay. I found this on the web for yes, sir.
All right, let's get right into it. So here, looking at the monthly chart on the dollar index, we are seeing a new monthly open here for the month of March. So looking at the dealing range we're in here on the monthly chart, we are still long-term bullish, and this was further confirmed by the bullish close we had here in February. Measuring the dealing range from premium to discount, we do see that price has traded down into a discount, this key monthly fair value gap that we've been discussing with you all. I assumed price was bullish here and was further confirmed when we saw the inability for price to trade down to the lower end of the fair value gap being below consequent encroachment. So because we could not trade down to the lowest level of the fair value gap, that is bullish. And looking at the close, we had a strong up close candle that closed near the high for the month of February. So with that being said, I will continue to expect further upside continuation here on the monthly chart for the month of March as well. More specifically, an expansion higher into the inefficiency here that was left from the month of November on this SIBI, the sell side imbalance, buy side inefficiency. So I will expect price to deliver higher into that. So that's what I'm seeing here on the monthly chart, and I'll turn it on over to my associate, Tommy.
Good evening once again, everyone. Once again, I welcome you to this weekly and live look ahead. Basically on the dollar, all I'm saying is after we took out sell side liquidity and traded inside of the fair value gap, that's around the 100 levels, and we've gotten a strong reaction of it so far. And basically, if we're to continue going higher, we would want to see the fair value gap in the sell side imbalance, buy side inefficiency filled up, and maybe even higher. So sequence to this, I'll be looking for higher prices and a upward closing month. That's a bullish closing month for the month of March 2023. And although it seems like we're starting with the down candle, if we are to continue going higher, we should experience a power of three. That is, the market should go down into discount levels, accumulate orders like we're doing right now, then move higher. So overall, I'm looking for a bullish close on the dollar this month.
Awesome, Tommy. Well said. So now dropping down here into a weekly chart, a little more on what Tommy touched on with regards to power of three. So whenever we expect power of three to happen, just like we do on a daily chart, for example, we expect a manipulation above the midnight price, if we are bearish. We'll expect the same thing on a weekly, monthly, 4-hour, 1-hour. Power of 3 can be scaled. So looking at the monthly candle, whenever we do expect an upward expansion, we would like to anticipate some kind of movement below the opening price. Why is that? Because that allows smart money or people that are in the know to accumulate at these cheap discounted levels being below the opening. So I am seeing last week's retracement on Friday as a Judas swing for the monthly candle to then continue higher. So now looking here at the weekly chart, we've had 4 consecutive bullish weeks, so it is logical to expect some sort of retracement. This retracement we have had the previous week was more of a consolidation on the daily chart, and price did not violate any key levels, and then we'll touch on that further in the daily time frame. So here, looking at the weekly, we have a swing low taken out and a weekly BISI, buy side imbalance, sell side inefficiency. Price has traded down into that level and has strongly reacted higher. And then we've had 4 consecutive up close candles. We've traded through the consequent encroachment of this wick, indicating that price is bullish. So when I'm looking at this previous candle as a down close, I'm anticipating this being an order block. As long as price does continue bullish and we do continue to move higher, I will expect that candle to be a bullish order block in the future. So that's more of an advanced view of order blocks, which is anticipating them forming and being able to react accordingly once they form. Most people see order blocks as, okay, an order block form, now let's allow price to trade back into it to then expect it to act as support or go as a long. However, when you can anticipate order blocks forming and see them coming as we are looking at it in the previous week, we can expect price to want to accelerate through that level, and we could even accumulate longs as a smart money trader inside of that key price level in a discount. So with that being said, I will expect a bullish week coming, and that'll be more apparent on the daily chart, what specific levels I'll be looking for and why. What has my attention here on a weekly chart is we have these relative equal highs here, and I will expect price to want to continue to draw up into that price level and into this bearish order block in here. So my 2 price objectives on a weekly will be these relative equal highs and the order block in here, as long as order flow remains bullish inside of these lower time frames like the daily and hourly chart. So with that being said, that's what I'm seeing here on a weekly time frame, and I'll pass it on over to you, Tommy.
Not to waste much of our time, well said, brother. I pass it back to you. You've covered everything beautifully well. 100. So basically, we are looking for the buy side to be taken out and further upward movement to the upside. That says we are bullish this week, but my first profit get objectives would be around the 105, 106 levels, the buy side liquidity, just above it. And just as Dylan has said, even when we are in a bullish market, we would expect some form of retracement to come and pick more orders to go higher. Just as we're discussing earlier, we go down to go up, we go up to go down. So basically, the bullish candle or the bullish close we had last week was just a retracement, in my own opinion, to go higher. Unless proven otherwise, I would want to see the buy side liquidity just above taken out, then we can continue higher. So that's my view on that.
Awesome, Tommy. Well said, brother. Let's go on to a daily chart now and look at key levels that would validate or invalidate what it is I am looking for. So now here that we're on a daily chart, let's zoom out before we zoom into the price action. So here we see we've taken out external range liquidity here and traded down into a bullish order block. Price is strongly displaced higher. And what we mean by displacement is look at the size of the candles. So here on the down movement here, very small, tiny candles, no displacement. Now look at the move higher with those long, exaggerated, energetic candles. That is a strong displacement and market structure shift, and that was a lot of the confirmation we've used to expect bullishness here these past few weeks. So with that being said, what key levels will I be looking at to continue to expect bullish order flow and continuation on the upside? Well, smart money traders, all of our attention is clearly above these relative equal highs. These stick out to us as we know this is a likely target that the market will want to aim for. So the levels in discount that I'll be looking at to continue to validate bullish order flow will be this bullish propulsion block, both of these down close candles. Why is this a propulsion block? Because it's nested inside of this order block here that we've outlined last week. So as long as price stays in the upper half of these two down close candles, I will expect price to continue to be bullish. Some other discount arrays I will be looking at is here we have a volume imbalance that price traded into last week. Let me get those lines thinner, 1 second. Okay, so the volume imbalance here denoted by these two lines, price traded into it and immediately rallied higher. We see here we have a fair value gap, the small space in between these two candles not touching. We see no body closures below these key levels. So price is still bullish to me on a daily time frame. Order flow is still bullish. Discount arrays are still supporting price. What I'm seeing here in this price action, it's not noise, it's a consolidation or a reaccumulation to go higher. So I want to take everyone's attention to this candle over here that formed, let me take this toolbar off, that formed on the 5th of January. So let's drag a rectangle from this bullish breaker over here to the right. So we see price has been trading inside of this breaker for some time now throughout this previous week. What I will want to see is price remain above this level, more specifically above the fair value gap and the volume imbalance. And the last line in the sand for me is if we trade through this breaker and leave it, that would be bearish for me, especially if we do see displacement. So as long as we stay inside this level and continue rallying higher, I will expect upside objectives to be met. What are those upside objectives? Well, as I've said, we have these relative equal highs here that price will want to draw into. We have a volume imbalance here where these bodies are not touching. And these are the same objectives I shared with you all last week. And then assuming we get through that with speed as well as this fair value gap, I will look at the consequent encroachment of this wick. So my first objective will be the 105,650 level. My second objective will be the 106 level on this week. And then assuming we continue through that with speed, I will expect delivery into the 106.316 level for the dollar index, as long as order flow remains bullish, and I shared what would validate or invalidate those ideas down here. So with that being said, in summary, I am expecting continued bullish order flow on the dollar index. I think this is just reaccumulation inside of a breaker. So the way most people understand breakers is the same way I was explaining order blocks. Price trades above it and then comes back down into it as support. That's a more myopic point of view. And once you start becoming more versed in these concepts, you can start seeing, especially in these lower time frames, how you can accumulate longs inside of the breaker before price even breaks out of it and then retests it. So I am seeing this as an accumulation of longs to continue higher. So with that being said, I'll pass it on over to you, Tommy, and then we'll get into the interest rates and look at the index markets.
No, 100. We're good. We're good. You're doing a great job, brother.
Appreciate that, my man. Thank you. Let's get on to the interest rates then. So looking at the 10-year yield, I prefer to look at the 10-year yield more. Why the 10-year as opposed to the 30-year? So the 30-year is more for housing. This is more of a fundamental analysis behind why we use it. So 30-year yield is more used for housing, mortgages, loans of that type. The 10-year yield is much more sensitive to various economic factors, being credit card loans, short-term financing, and stuff like that. So that's why the 10-year yield is my preferred bond yield to look at as opposed to the 30-year yield. But I do use them together for SMT and for intermarket analysis. So here looking at the 10-year yield on a weekly chart, we've had 5 bullish weeks in a row. So price is extremely bullish here on the interest rates. Yes, we had a little bit of a pullback at the wick, but what I was discussing here with my associate ahead of this meeting is we have traded through the key levels of this order block that I highlighted to you all last week. We traded through the low and the open of this candle, which are 2 sensitive price points. So because price has traded through both of those levels, that's indicative that we are likely to see further continuation for the 10-year yield on a weekly basis. So looking here on a daily chart, the objective I outlined for you all last week was the full fill of this fair value gap. So if I share this rectangle here in blue, I was anticipating the 406 level, which is the upside on the fair value gap. So we've seen a full fill now of this fair value gap, and that delivered beautifully last week. So what has happened once we've delivered to that level? Price has traded lower on Friday. Where has price traded lower into? It's traded into a key bullish order block. So we would use both of these consecutive down close candles. As always, why these two instead of this one? Because we want to use the lowest body down close. So we'll look at both of these consecutive candles that are inside of this order block. So these would actually be a propulsion block as a classification for order block. So price is traded down into the opening price, and this marked out the low on Friday. So as long as price stays above this order block and inside of this fair value gap, I will continue to expect upside delivery into these relative equal highs here. What would invalidate bullishness on interest rates and dollar for me? If the interest rate does trade below this fair value gap, the last line in the sand for bulls would be this bullish breaker in here. And let me take off this fair value gap so I can highlight the breaker. So here we have a bullish breaker, the last up close candle before the sell side liquidity purge and the market structure shift. So price has found support here inside of this bullish breaker, and price has then rallied higher. So as long as price stays above this breaker on the 10-year yield, I will continue to expect upside delivery to our premium objectives and continued bullish order flow in the dollar as well. So with that being said, I'll pass it on over to you, Tommy, and we'll get into the index and Forex markets.
Okay. Nothing more to say on my part. I have a slightly different approach, to looking at this week um, on the 10-year yield, basically. But great analysis that Dylan has done. But basically, for me, if we are to continue going higher, just as Dylan has said, we should continue to see bullish PD arrays being respected and new highs being formed. But last week, if we compare the dollar, Dylan, can you go to the dollar chart?
Yes, sir. The daily time
In
frame.
comparison, yeah, the daily time frame.
Okay, actually,
In
I'll
comparison to
compare them side by side. So let me pull them up.
okay.
All right, here we go.
In comparison to the 10-year yield, basically, we've noticed that dollar has been finding it hard to get above a rejection block, and even the 10-year yield has also been finding it very hard to close above and to overcome the fair value gap to your far left. So basically, like Dylan has said, we're still bullish. I am still very much bullish. But should in case we cannot, or another scenario plays out, I just want to add this. We have an SMT between the dollar and the 10-year yield, where the 10-year yield has taken the previous highs out, and the dollar is yet to do that. So basically, next week, just as Dylan has said, although we're still bullish, we would be very, very mindful of this to see if we can get a displacement or a very strong displacement higher to take out the buy side liquidity and move higher. But basically, if we can't get that, we would be watching to see if the sell side liquidity or the lows are not being violated. So I just wanted to bring our attention to that in case, what we're hoping for does not play out, so that we can have another course of action to look forward to, basically. But to me, I'm still very much bullish on the dollar and the index rates moving forward. And I'll be looking for higher index rates until proven otherwise by price action. So over to you, Dylan.
Awesome. Okay. Appreciate that. Great analysis as always. And I love the different perspectives. And I think this really helps out our community seeing the different points of view and ways we reference these specific PD arrays and key levels to determine our analysis. Awesome. So with that being said, let's transition into the index markets. So in summary, looking at the interest rates in the dollar, We are still expecting risk off higher interest rates, higher dollar. So this will continue to put pressure on the index markets and the foreign currency as long as the order flow continues with specific levels we've outlined. So with that being said, now going into the S&P. Tommy, did you have anything to share on a monthly chart before we drop down into a weekly, brother?
No, nothing, bro.
Okay, awesome. So here, looking at the weekly chart now, just to recap what we've been doing. So prices traded up into a premium level again, looking at the dealing range we've been stuck within. One thing I do want to take our attention to is that price has spent most of its time in premium. So I will expect it to seek discount levels, being this liquidity here. And that's what I shared last week with my midterm to long-term outlook on the index markets. I am extremely bearish, as I am very bullish on the dollar. So with that being said, we've seen a swing high here form on the weekly chart above buy-side liquidity in a premium. So that's how I've been able to confidently tell you guys that I am expecting lower prices, and we've seen that the past 3 weeks. So now looking at the previous week and how it traded. So the template for last week, dropping down into a daily real quick, and I'm going to refer back to the weekly. We had an expansion lower Monday, Tuesday into Wednesday, and then we had a Thursday, Friday reversal. So that was the template for the previous week. The reason I am expecting that we did have this retracement higher back into a premium is because the monthly candle just opened. So marking out the monthly open, which would be this level right here, mark this in purple. So we see here, this is our monthly opening price. So as we've shared with the dollar, since we are bullish and we saw this price movement lower, that to me is a Judas swing or power of 3 for price to continue in its intended direction. So since we had the opening here, do we expect price to just continue sinking down into our discount objectives? If we are expecting the month to expand and play out in that manner, we would want to see some kind of manipulation higher. Why is that? Because, okay, if here's our opening price at the 39.68 level, who wants to accumulate above that opening price, above buy-side liquidity? Smart money. So they can counterpair, so they can be the counterparty to the buy-side liquidity here, sell to those buyers in a high price to then distribute them lower. So what I'm internalizing this price movement in the previous week as is a Judas swing higher into a premium for a price to accumulate more orders to go lower. But I'll go into that more on a daily chart when we get there. So with that being said, swing high formed here on the weekly in a premium. Price has displaced lower, and we have retraced Thursday and Friday of last week. So what I'll be monitoring here on a weekly chart is we have a volume imbalance here at the open of this candle, which would be the 40.83 level, and then the close of this candle, which would be the 40.87.5 level. As long as price respects this volume imbalance, as well as this small fair value gap we have between last week's close and the week of February 13th low, as long as that fair value gap is respected on a weekly basis, I will continue to expect lower delivery here for the index markets, as long as the dollar remains bullish, of course. So with that being said, that's what I'm seeing here on a weekly chart, and I'll pass it on over to you, Tommy, before we get onto the daily.
Okay, that's great, brother. Basically, I don't really have anything much to say. You've said everything quite well, so I just feel we should scroll down to the daily time frame.
Okay, that
Moving
sounds
forward.
good. Well, I'll let you take care of the daily, and then I'll share what I'm seeing in addition to what you have to share, brother.
Okay, on the daily time frame, just as you've said, we're still, in my own opinion, heavily bearish, and what has just happened is just, in my opinion, a power of 3 on the monthly and a retracement, just as the 2022 model. If after we get the market structure shifts, we would expect price to return to a fair value gap to continue to send price lower, which we have gotten so far last week, where price closed around 4049. So moving forward into next week, in my opinion, I would want to see lower prices on the indexes and higher prices on the dollar. So I would want to see prices go lower, but definitely if we are to go lower, we would go up first. We'll go up to go down. So we could potentially reach for the volume imbalance around 4.1 or let me just say 4096 or 4086 before we continue to move lower. So that being that, I'm expecting lower prices on the indexes throughout of next week, and unless proven otherwise by further price action, I'll be looking for lower prices. And just as ICT has taught us, we cannot continue to go. If we are to go lower, we cannot continue to go lower inside of a premium, or no, sorry, inside of a discount. We have to move into premium market. So that is why as what happened last weekend. We've been in a consolidation for about 1, 2, 3, 4, 5, 6, 7, 8, about 8 days in total. So we needed to break out of the consolidation, take out buy side liquidity, kick out the early sellers, and then shift and move the market lower. So in my own opinion, I'll be looking for lower prices next week, and my profit objectives would be let's say first profit objectives would be 3946, and maybe later on I want to see 3921 being taken out for next week. But I'm bearish on the indexes market going into next week. Thank you.
Awesome. Well said, Tommy. Okay, so looking here at the index markets, before I get into my daily analysis, I just want to remind everyone of what we've discussed so far and how to put all of this together to form your weekly analysis, bias, and narrative. So bullish dollar is making me bearish indexes because of the market structure, the order flow, as well as the strength of the bond yields has me favoring an extremely bullish dollar, which will put tons of pressure on the index markets and foreign currency. So you can see how intricate this gets and why it's important to have a process that you do consistently to give you insight into all these inner workings to trade with high probability and in line with real institutional order flow. So with that being said, looking at the index markets now, we've seen a swing high form on the daily in a premium above buy side liquidity. I've been sharing with you all my discount objectives were the sell side liquidity below these swing lows. And my first objective on the previous week was the mean threshold of this bullish order block. That is the 39.25 and a quarter level. So let me mark that out here, 39.25 and a quarter. So this was the mean threshold of the order block. We can see here that this rounded out the low of the week and then price rallied higher. So to give a little more context on why I present these analysis the way I do, I give multiple objectives for the week. Why is that? Because I think all three of them will be fulfilled? Not necessarily. That's why we give multiple, because price can react at each one of these objectives. That's why we have them as price targets, so that if we are in a trade, that's where I'm looking to close off some or all of my position, because we can't see reactions off these key levels like we've outlined the previous week that was possible. So here we've hit the mean threshold of this order block and immediately rallied higher. So if we look at the low of the week up here in the upper left-hand corner, we see the low on Thursday came into 39.25. So a quarter of a point below was my first objective on the week for downside. So I don't think this is price reversing higher or engaging in a buy program. I just think this is simply a retracement to premium, as my associate did a great job of covering. Price needs to offer premium before continuing to discount. It can't remain in discount. It needs to offer smart money the opportunity to get in net short in a premium market. So with that being said, we've hit the mean threshold and we've rallied higher. The way I'm anticipating this is, as Tommy also highlighted, the displacement leg. We have likely just seen a retracement into a premium to then go lower. So as many of you know, the ICT 2022 model, it's buy-side liquidity purge, displacement lower, market structure shift, price retrades into a fair value gap. The reason I am favoring lower prices is look at the strength and the energy with which price ran down. Look at how lethargic these up close candles are in here, and then we see price displace lower with a lot of energy. So that's indicative to me of an extremely bearish market as we see the displacement with the long exaggerated energetic candles. So I'm anticipating this retracement higher into a premium of the displacement leg, and I will want to measure order flow by gauging how price trades inside of these key premium levels. So we've delivered higher, almost closed in this daily fair value gap. There's two prices or three key levels above market price that I will want to monitor going into this week. We have the breaker in here at this level. Let me make that in blue so that sticks out. Okay, so this would be the bearish breaker. Why am I expecting this to be the breaker? Because if we drop down here into a 1 hour chart, we can see here that this was the last up close candle before the up move that purged buy side liquidity before going lower. So this would be our bearish breaker. So we inside of a premium now, we have a bearish breaker. We have 3 volume imbalances here, as well as an order block in this candle. So as long as price remains heavy inside of these key premium levels, I will use that in my analysis to get a feel or measurement for order flow. So I will want to see price respect these key premium levels if we are going to continue lower. So I will expect something like an open of the weekly candle, some kind of Judas swing into these key levels, and I want to see immediate feedback from price that price is bearish and that we are indeed rejecting these key premium levels so that we can continue to attack the relative equal lows here. We see relative equal lows were left intact. What does that do? That builds in a sentiment of a double bottom, support, and that price is likely to rally higher. So I'm seeing that as engineered sell side liquidity for price to want to come down here into these relative equal lows and sell side liquidity in discount. So with that being said, that's what I'll be monitoring going into this week. I want to see price get heavy inside of these key premium levels. What happens if it just continues rallying through it and blows through those levels? Well, then we'll just have to play the hand we're dealt and get in line with what the algorithm's showing us. So that's why it's important to not be stuck into a bias and measure order flow for what it's giving you at the time and reacting to what price is showing. So with that being said, my downside objectives for this week will be previous week's low here at the 39.25 level, and then the relative equal lows here at the 3900 level. And then assuming we get acceleration on the downside, we could hit the mean threshold of this bullish order block here. So I'm expecting lower delivery as long as the conditions are met that I've outlined for you all. With that being said, thinking of the economic calendar we have ahead of us this week, Monday, no high impact news drivers, so I'm expecting Monday to be more of a lackluster day because we've had a huge range Friday and there's no news drivers on Monday. So likely sloppy trading session for Monday's session. We do have non-farm payroll this week, so it's important to be aware of that. Going into Wednesday, Thursday, price could start doing Asian range consolidation type templates going into the non-farm payroll for aggressive, violent movement for that news driver. So be conscious of the economic calendar this week. I personally will not be trading Wednesday, Thursday. I will allow that to play out, and then I'll come in and see what happens after the dust settles with the non-farm payroll event. So with that being said, that's what we're seeing this week and how we're going to be navigating this week ourselves. With that being said, unless Tommy, if you have anything to share here on the weekly chart, we will get to the questions.
Nothing at all, brother. I'm good.
Okay, awesome. Let's get to the Q&A portion of the meeting, and we appreciate your guys' patience here with our technical difficulties in the beginning of the session. Okay, hey David, what's going on, brother? Yes, sure. Yes, sir. I'll be sure to take a look at the euro for you. So we got a question here from Latrice. How does risk off affect the oil markets? So oil is actually an asset that I monitor quite a bit for investment purposes. Oil's in a very sloppy consolidation right now. I think it's setting up for big moves this year. I just don't think right now is the time. and I'm expecting crude oil's movement to be muted as we do have a bullish dollar. So risk on high affects indexes, foreign currency, digital assets, as well as commodities. So as the dollar rallies and gains strength, that'll put pressure on every other asset, including commodities. So as we're seeing here, the gold market has taken a substantial hit as the dollar's been rallying. Silver has taken a substantial hit lower. And while I'm on these assets, I'll go ahead and give my price targets. I am expecting discount to be delivered with the gold markets, more specifically this fair value gap. And assuming we get through that with speed, we do have relative equal lows here. And on the silver market, we have relative equal lows down here, and we've already actually traded down into a discount. So I will want to see how we react in these key levels. But risk on, risk off also applies to the commodity markets. What's interesting here with the crude oil market is it actually has not been reacting too much to the bullish dollar. So I'm thinking oil wants to move higher, but it needs to wait for the dollar to stop rallying continuously for it to be able to do so. So with that being said, the oil market is pretty much in a consolidation. I'm thinking it wants to move higher, but because the dollar is extremely bullish, that is muting any movement on crude oil. And seeing that we haven't moved lower, we've tried multiple times, and price has been unable to trade below these key levels. I will be interested in further upside on oil, however, not right now with the dollar being so bullish. So that's what I'm thinking for the oil markets for the time being, and also how the risk on, risk off relationship affects the crude oil markets. For EU, let's take a look at that. So as you guys know, it's an inverse of the dollar index. So nothing really here on a weekly time frame. Well, okay, there's one thing. So here we have an up close candle, price traded through the opening, changing the state of delivery, seeing price trade up into this. Let me see the 50%. Okay, so the 107.089. Okay, so as long as the 107.089 level on a weekly chart is not violated with a body close, I will continue to expect lower delivery on euro along with higher delivery on dollar. Dropping down into a daily chart now. Order flow to me is still very bearish. We have this breaker here, price traded up into it, rejected it beautifully, and price is traded down and through the mean threshold of this bullish order block, which is very crucial. So the fact that we traded through this mean threshold level, to me, is indicative that price is bearish and likely to continue. I did give a midweek update on the euro and shared the consequent encroachment of this fair value gap level, which, just eyeballing it, is about the 1.06781 level. I said monitor this level, and we want to see price get heavy inside of it and not mount a rally or a close up through the consequent encroachment. So we see price hit that consequent encroachment and immediately rejected. That's what I want to see in the euro, assuming we are going to continue bearish order flow and bullish order flow here on the dollar index. So I will expect continued downside delivery on euro. We now have relative equal lows here forming. And as I've shared with you all with my medium-term to long-term outlook, I am expecting us to reach discount in euro and take out this sell-side liquidity below these key lows. So as long as we remain below this fair value gap in here, I will continue to expect lower delivery for the euro dollar, and I will expect these relative equal lows to be delivered to, the swing low below here, and assuming we get further acceleration on the downside and the dollar rallies higher, I will expect this swing low here to be taken out. So with that being said, that's what I'm seeing here for the euro. Yeah. Let me check the Telegram real quick to see if there's any more questions. Hey Romeo, yes sir. So I'm looking at your question right now for the NASDAQ. Yes, so we have those same, let me remove these levels here. So we have those same volume imbalances here on the NASDAQ as the S&P. And yes, I will expect a reaction in these levels if we are to remain bearish. I'm now seeing we have relative equal lows here, and I will expect the NASDAQ to continue its lower delivery down to these relative equal lows as a long-term outlook and perspective. So what I'm seeing here is we've consolidated in a premium, prices displaced lower with a lot of strength and energy, and I am just seeing this as a natural retracement into the displacement leg to then continue lower. However, we will have this confirmed to us by the price action going into next week, seeing how we trade in these key levels. So for us, it's very black and white. We want to have our analysis be binary. If this, then that, because that's how algorithms operate. If this condition is met, then this condition will precede it. So we want our dialogue to be binary when analyzing the markets. So as long as price respects these key premium levels, I will expect lower delivery for the NASDAQ, just as I will the S&P. Hey Latrice, yes, so I see your question regarding you understand daily bias. It's just difficult to get the entries for the movements, if I understood you correctly. So bias helps with intra-week trading in terms of a direction. So for example, since we've been bearish, you primarily want to focus on bearish setups, as those will be your cleaner, low resistance liquidity runs that you'll be able to see. In terms of entries and reading the order flow, the same thing we're doing here on a daily, weekly, monthly. You want to do the same top-down approach into your hourly, 15-minute, 5-minute, and 1 minute, depending on where you're taking your entries. I personally specialize in intraday scalping, so I am operating a lot on a 1 minute, 5-minute basis. But whatever your lower time frame or entry time frame is, whether you're a swing trader, scalper, whether that's a 15, 5, or 1 minute, you want to do the same top-down approach, and that'll give you the clarity you're looking for with regard to your entries. If you are having difficult time trusting these setups as you're seeing them form, that is something that comes with experience, watching these candles print over time, tape reading, analyzing, okay, price just took out this buy-side liquidity. Let's see how price reacts here. Does it immediately reject and trade lower? Okay, this would be a potential trade setup, and then you start logging these experiences. And then over time, you will grow to trusting these setups over time. So that would be my best advice in regards to how to implement the daily bias and your analysis inside of your intraday trading sessions. Okay, and someone wants us to take a look at the euro pound market. Okay, I remember looking at this market last week. Okay. So what I am seeing here, that we have taken out relative equal lows here. So we had a swing low form below these lows, and then price immediately rejected these levels and traded higher, shifting market structure. So as long as price for the euro pound remains above this bullish order block here, I will anticipate continued delivery into the buy side liquidity pools here. However, if we trade through this order block, I will expect price to go lower. Why do I think this is an order block that will hold if we're bullish? Because the sell side liquidity was accumulated below these swing lows, and price displaced higher with the fair value gap, which is insinuating to me that these sell stops were accumulated by smart money. So where will they look to distribute those buy stops? Above these highs here. So just a short-term outlook here on the euro British pound. As long as we remain above the mean threshold of this order block, I will expect higher delivery for this market. However, if we do trade through this level, then we could look to attack these relative equal lows here and the fair value gap in a discount market. Okay, and let me check the Telegram real quick, make sure there's no last minute questions. Hey Ronan, so I see you're asking a question regarding how to qualify and validate setups on the S&P using the dollar index. So yes, ICT did touch on this week. So a way you can use this in your intraday analysis, you can apply it the same way we do with our top-down analysis we do as our pre-market prep. So you can look at key PD arrays that the S&P is entering. So let's just say, to not find examples, I actually wasn't able to do that. But if you would like more clarity, I can find some examples in this coming week and have that ready to present for the following webinar on Sunday. But just an auditory explanation. Whenever, let's say, the S&P is trading up into a 5-minute fair value gap. So we took our buy side liquidity, we shifted market structure lower, and price is now trading up higher into a fair value gap to then go lower, and that's what you're anticipating. Well, you want to look at the dollar before pulling the trigger on that entry. So as you're looking to go short dollar, you want to see that the dollar index is indeed bullish. But if you see, for example, that the dollar is barreling lower towards relative equal lows, it's not likely that the PD array in the ES will hold, because above all these intermarket analysis is intra-market analysis between key correlated pairs like dollar and ES. So you can use it in that way to qualify and confirm setups that you're looking to take in, whether that's indexes, Forex, and even commodities as well. And if you want me to further expand on that, I would be happy to do that next week. Let me know if that covered what you wanted, but if not, I would be more than happy to expand on that next week, brother. Soren, so hello, I have a question in the weekly analysis. What is the 5-handle strategy? When and how do we use it? Thank you very much for your question, Soren. So the 5-handle strategy, it's something that ICT implements as a low-hanging fruit approach. It's a good place to start for beginning traders that haven't yet found their profitability or their stride in the marketplace. It's a very low-hanging fruit approach that gives you a reward, and if you're trading E-mini S&P contract, each point is $50. So each trade, assuming you pull it at 5 handles and that's where you take your profit, it'll be a $250 profit or $250 loss, assuming you lose a 5-point stop loss. So that's something that you can trade on a 1 minute. You can't go above a 1 minute and trade with a less than 5-handle stop loss, as that would be extremely difficult to do and wouldn't be advised, as you would be constantly being concerned about your stop loss. So now that we established the time frame, it's a 1-minute strategy. You're able to use it. So let's say price has just taken out relative equal highs on the form of buy side liquidity. So here, let me show an example. Okay, so right here. So looking at the opening price here, that's pre-market, that's movement before the kill zone. Let me find another example. Okay, so let's say down here we had the inkling that price is bullish and we are likely to reach premium levels. So once we see market structure confirm that, and just a quick rundown on the market structure, this is a long-term low. Why is this a long-term low? Because we have 2 intermediate term lows to the right. So here we have intermediate term low. Let me label that. So this would be an intermediate term low, and then I'll come back to why I would classify it as an intermediate term low. And then here we have a long-term low. So I'll go into market structure a little bit here. So here we have an intermediate term low because it's in between a short-term low here and a short-term low here. This is an intermediate term low because we have a short-term low here and a short-term low here above it on each side. So that would qualify this as a long-term low. So what's that beneficial and how should you use that? Okay, so if we are bullish and we are expecting higher delivery, intermediate term lows should not be violated, especially not a long-term low. So where would the draw on liquidity be? Assuming the monthly open, for those of you guys that were with us here in the beginning of the video, this purple line was the open of the monthly chart. So if we are expecting a lower month, we will expect a manipulation higher. So as a target, you could use these relative equal highs. So how could you implement the 5-handle strategy, assuming you had known that price was likely to deliver to a premium? Okay, so we've determined order flows bullish, market structure is confirming. So then you want to go into the lower time frame charts and look to get pieces of the move. So we can drop here into a 1 minute. And then we'll go to the bottom of that move. Okay. And then you can just use the fair value gaps to get in line with the movement that's already taking place. So you could, for example, get an entry here in this fair value gap, have a stop loss that is 5 handles, which would be below here, and then take a 5 handle profit target. So it's not capturing the whole move or the daily range. It's just a strategy to get in line with the move that's already likely occurring. And it's more for beginners so that they can learn to trust these setups. So you book your profit at 5 handles, close out the position, take it to the bank, and then you watch the rest of the move play out. And then over time, you get confident watching these moves play out, and then you can eventually graduate into holding trades longer. So that's more or less a rundown on the strategy ICT teaches is a low-hanging fruit approach for beginner traders to grow accustomed to trusting these setups over time. So with that being said, I believe we've covered all the questions. Let me double check. Okay, hey Latrice. So you're asking what broker do we use for index futures? So for my funded account, I did trade CFDs through True Forex funds, but I personally now like trading the futures market. It's a lot more cleaner, more professional. You don't have to worry about the dealing spread, the slippage as much as you have to with futures. So I've been using Topstep for my professional trading. For my personal accounts, I do trade derivatives. So I'm an options trader in my personal account, and I use the SPY and QQQ and trade that through options. And for that broker, I use TD Ameritrade. So those are the brokers I use for my trading and that we use here on the Adora Trading team. So with that being said, I think that's a wrap. So thank you all for sharing your time here with us and for being patient in the beginning of our webinar. I appreciate you all sharing your time and engaging with us and sharing your questions. I hope everyone has a great week. Good luck and good trading, and stay safe. I'll pass it on over to you, Tommy.
Thank you, everyone, for coming. We appreciate you. I believe it was a productive and beautiful session. I wish us all a great week and great trading. Good night and goodbye.